Good morning, everyone. How are y'all doing? Let me just get my hair upright. It is, that made it worse. All right, we'll deal with that, whatever. Whoops. Happy Tuesday, November 7th. Hope everyone's doing okay. Let me know if you can hear the audio and we'll get this thing started. Not crazy news so far, but we'll talk about the ES equity market here and some of my plans for the day. We'll take a look at tech as well because tech has been rallying pretty hard even after those earnings. Thank you for the sound check. So let's dive right into this. Just scratch myself apparently. So first and foremost, right, we'll talk about WeWork. WeWork has been in the news for quite some time over the last few years, right? Just about 4 years ago, we had an assigned valuation of $47 billion. Office sharing company WeWork has now filed for your Chapter 11 bankruptcy protection, marking a big fall from grace, a firm that attracted major investments and investors from the likes of SoftBank and JP Morgan. WeWork listed both assets and liabilities in a range of $10 to $50 billion while entering into a restructuring support agreement with about 92% of its secured note holders. And in addition, the company will further rationalize its commercial office lease portfolio as it undergoes a restructuring which only impacts operations in the US and in Canada. So what went wrong? Cracks began to emerge as the spotlight fell on, remember, founder Adam Newman, right, and his leadership style, so which emphasized breakneck growth at all costs, even at the expense of long-term portfolios, along with several conflicts of interest and financial turmoil led to his ouster and the derailment of an IPO that was scheduled for 2019. Major shareholder SoftBank finally stepped in to turn things around, doubling down on the investment, upending management, and eventually taking the company public via SPAC, though it was not able to cut costs fast enough to support the operations. So WeWork managed to restructure many of its leases and reduce rent, though this happened at the same time as the pandemic, the COVID-19 pandemic, and a new work from home model that kept people away from shared office spaces was ensuing. So, giving many landlords little incentive to grant further breaks on their contracts, profitability also continued to remain elusive for hundreds of WeWork locations across dozens of countries. And while the company reached a sweeping debt restructuring agreement in early 2023, financial troubles naturally came back to bite again. In mid-August, WeWork announced that it was doing a 1-for-40 reverse stock split to meet the NYSE requirements, only to disclose substantial doubt about its ability to stay in business. Right, reverse stock splits, generally what happens in those is that you increase the price of the stock with the expectation that there's further downside to go. So WeWork has a strong foundation, dynamic business, and bright future. Current CEO David Tolley declared, "Now it's time for us to pull the future forward by aggressively addressing our legacy leases and dramatically improving our balance sheet. I'm deeply grateful for the support of our financial stakeholders as we work together to strengthen our capital structure and expedite this process through the restructuring support agreement. We remain committed to investing in our products, services, and world-class team of employees to support our community." That's what he said. So the downfall of one of the most promising startups in the 2010s is a big lesson for many people out there, many investors and whatnot. Among them is being aware of how quickly a business environment can change, right, and how to diversify risks in relation to that reality. Other downsides related to growth at all costs, as well as giving a deeper analysis of financials and management. The herd mentality of venture capital firms, Wall Street, and other investors saw many overlook the need for a proof of concept, and to date, WeWork has never posted a quarterly operating profit in its near 14-year history. In terms of real estate, other news in terms of office spaces, commercial real estate continues to be pressured by maturing debt. Barclays warns their prices could slide further. Prices for office buildings have dropped 20 to 30% from their peak levels, and there may be more pain to come, with offices yet to feel the full extent of the Fed's aggressive rate hiking cycle. These things have a lagging effect necessarily. So prices for high quality buildings will likely fall around 40%, while distressed properties may only fetch the cost of the land. The continued deterioration in the commercial real estate space is likely to be a key factor in the recession in 2024 and potentially 2025. Some of the other news, we can look at fundamentals. We can look at Berkshire Hathaway that posted recent quarterly earnings. And as we come to an end of free money interest rate normalization and return to fundamentals, opportunities and growth and value will lead the market. This is what the chairman at Davis Advisors said, right? Chris Davis. And the long-time Berkshire Hathaway investors said that the price of money was distorted and manipulated over the decade. We're just in the early linings of this unwinding, he said, noting that investors should focus on characteristics like durability and resilience. He also explained that the repricing of money is to return to normalcy, forecasting a hangover from popping the bubble of the fixed income markets. And this was already seen during the regional bank crisis. And it will affect private equity and venture capital as well as parts of the commercial real estate market. So we'll see how that shapes up. But like we've talked about before, these are lagging effects that we'll see in the overall economy and asset pricing from these higher for longer rates. In terms of news today, we have Fed's Barr that's coming on the wire in a few minutes, Fed Schmidt as well, Fed's Waller, all in the morning session, Fed's Williams, right? Fed's Logan, all these. So 9:50, 9:50, 10, 12, and 1:30, all Fed speakers. Some of them are talking about financial technologies, others energy and the economy, reshuffling the energy deck. One of them is talking about using economic data to understand the economy, and then we have a speech. So fairly thick news in terms of Fed speakers today, unfortunately, but such is life. We'll see how that might shape up the market movement. Now, let's run into the overall S&P 500 futures market here. So let's see what we got. The S&P 500, what we have is, like I said yesterday, a strong rally to the upside, accepting into distributions higher. Right, there's a larger end of a distribution at 43.90ish to low 90s, right, 92, 93, 94, something like that, which is going to be a little harder to break through. Yesterday we had a P shape in the volume profile that suggested that we would see a little more downside leg. Overnight we did drop into that mid to high 60 again before seeing some kind of a bid, and we have this immediate resistance around this like 78 or so to see if those sellers are going to open up. Now, the thing is, there's a very, very, very important level that everyone has to take note of, 43.60 to 65. That region has been played multiple times as a key area for the sellers and the buyers over the past 2 months. So everyone has to be very, very cautious about that level, right? As long as we can hold it, the bull side is going to try to accept higher. Now, any offer below it, we're probably going to see a 30 to 60 point drop before we can rebid this market. So it's a very, very pivotal area that everyone has to keep an eye on. The more we hang out here, the higher the potential for that break to the upside, as long as the sellers don't break through that 60-65 area. That's what I'll be looking at today. I hope everyone had a great Monday, has a great Tuesday, and keep an eye out on more news as we enter into the Thanksgiving period and the Black Friday period in a few weeks for our friends over in America. Fatty, yes, of course, every day. I hope everyone has an amazing trading day. We're going to open up our live trading room today, and tonight, your afternoon, we're going to be going through a live lesson of order flow for our members. So I'll see you guys in there. Check out community.tradeproacademy.com as we get ready for this market open, and we'll be putting a few things in there, and we'll see how this day breaks down. Realistically, we're in a position where we are seeing market compression before the next expansive move. Remember, trade the ledges, trade the extremes, don't get caught out.